Welcome everybody to this afternoon's eagerly awaited book talk on Rebellion, Rascals and Revenue. It's a great honor to introduce Joel and Michael here today. Joel Slemrod is the Director of the Office of Tax Policy Research and Paul W. McGracken, Collegiate Professor of Business Economics and Public Policy at the University of Michigan. And Michael Keane is Deputy Director of the Fiscal Affairs Department at the International Monetary Fund. Together, they're two of the world's leading public finance scholars, and we're very privileged to have them here today to discuss their recent book. I think this is the first in-person book talk that they've given, so we're particularly happy to have them here in person today. As you know, the book is a remarkable achievement of 400 pages on the details of taxation, which is perhaps not the most thrilling topic that anybody would think of, and yet in their hands, it proves both highly informative and richly entertaining. And so to quote Barry Eichengreen from the University of California at Berkeley, it's hard to imagine a more timely and entertaining history. And to quote Larry Summers of Harvard University, whoever said taxes were boring, they're not only the price of civilization, they're also the source of many fantastic stories. This book is in equal measure entertaining and instructive. And more generally, the book is just full of examples of the way in which popular culture and even language have been influenced by taxation throughout the ages, such as the phrase guinea pigs, as I'm sure they will mention. And then also more generally, it's just full of instances of unintended consequences of taxation to remind ourselves of how important incentives are in economics, such as the infamous example of Britain's window tax, which led to this employment boom for carpenters and stonemasons. And so without further ado, I'm going to hand over to Joel and Michael, who are going to speak for around 45 minutes. And if you have questions during, please feel free to interrupt. And we'll also try to keep a few minutes at the end for general questions and answers. So handing over to you, Joel and Michael.
Thanks very much. Thanks for the kind introduction. Thanks for turning out. So we're a little bit nervous. It's our first in-person presentation, but we'll see how we go. So here is, so to start things off, here is the cover, which we're very proud of. We take no credit for it. And it's been called Taxation's Summer Blockbuster, which you'll think is a pretty low bar, but we take all the positive comments that we can. So what is the book about? So basically, as we've heard, most people think tax is kind of boring. Joel and I have kind of dedicated our professional careers to this, so we find it hard to understand why anyone can think tax is boring, but nonetheless it seems people do. So what we try and do is use kind of stories from the last several millennia to make tax kind of interesting and enlightening. But beyond that, it's not just a collection of stories. What we try to do is to convey some basic tax principles of tax analysis, in a kind of pleasing, engaging sort of way. Partly, I think, because we have a sense that economists haven't really done a great job at explaining basic ideas of tax theory that I'm sure are familiar to many of us here, to ideas of tax instruments, who really bears the burden, issues of fairness. So we're trying to convey things in a relatively painless way. Partly, as you'll see, by using pictures. So we're pretty proud that Joel thinks this has more pictures than any other book on, real pictures than any other book on tax. So we're trying to, messages, taxes aren't boring. Also, I think that really the basic challenges of taxation haven't changed that much over the millennia. So governments, rulers, princes, kings have always been trying to raise whatever revenue they need for whatever purpose, in a way that is at least fair enough, even if they don't care inherently about fairness. They want it to be fair enough that their reign is going to survive. They're not going to end up with their heads on the end of sticks. They're trying to do it in a way that doesn't actually destroy the economy, the tax base. What kind of does change, we'll talk about this, is the technology by which governments have tried to do this. So, of course, as we say, it's not just a kind of a download of funny stories, but if you do have funny stories, we are always in the market for more. And everybody seems to have one. It's one reason the book took so long to write, is you'd think you'd finished and someone would come along with some other great story. You had to kind of, A, figure out if it was true, and B, if it was worth including in the book. So in terms of, it's not a textbook, but don't tell anyone, but the structure very much follows what you would think of a kind of a straight public finance book on tax is. So we do hope this will be used to liven up courses, not just in public finance, but maybe in either public affairs or whatever, or accounting or whatever. So we're going to go through these various chapters. It'll become clear as we go through, but it's underneath all this, don't tell anyone, is a kind of textbooky sorted structure. So we're going to start by talking about the kind of motivating the book, talk a little bit about naming. I should say Joel and I are going to stand up and down at various points as we go through this. So in terms of motivation, well, we don't, even though we work on tax, we don't think tax explains actually everything. There are people who think that President Kennedy was assassinated because he was about to close a loophole for the oil and gas industry. We don't buy into that one. Nonetheless, tax does explain, we think, quite a lot. So here are three stories to illustrate the point. First off, well, can we think of any wars that were actually about taxation, prompted very immediately by taxation? And the answer is we have one. That's the picture on the left. So this is the 10 Cents War of 1879, 1884, which essentially pitted Bolivia and Peru on one hand against Chile on the other. What's the tax angle here? The tax angle here is that there was an area then controlled by Bolivia called Atacama, which was basically desert, so nobody really cared much who actually controlled or owned this territory. But then nitrates and guano got discovered and it became quite interesting. A lot of Chilean companies moved in to extract these resources, and they were given what we would now call a fiscal stability clause. So as Bolivia said, okay, you can extract this, there's an export tax of whatever it was, 10 centavo or something. I think we spent a week trying to find out what a centavo was. But you can see what happens. Eventually Bolivia changed their mind, raised the tax, and Chile promptly invaded. Peru was brought into the war because they had a secret agreement with Bolivia. How did it end? It ended badly for Bolivia. So if you look at a map of Bolivia, as I'm sure you all know, Bolivia is landlocked. And the reason it's landlocked is because it lost this province of Atacama in the 1879 10 Cents War. And you can see this is a real war. This was really actually a very bloody and nasty war. And the dispute still continues. There's still, I think a couple of years ago, the International Court of Justice, Bolivia was still trying to get some of this territory back. They lost. Most recent case, haven't really given up. And we're told that it's still the case in the annual Miss Bolivia contest, there is still a contestant from the missing province of Atacama. I'm not sure we've checked if that's true. It's so good that we didn't want to check it in case it might not be. But then when I say, well, what war's been fought about tax, you probably think, well, hang on, what about the Boston Tea Party? What about this whole American independence thing? Well, that was actually about a tax cut. What's the story there? Well, to cut a very long story short, the East India Company was in big financial problems at the time, partly, in fact, because of a famine in India, which was destroying their tax revenue in India. That's the other part of the geopolitics. And that was really nasty. What was going on in India was really nasty in terms of raising revenue. Anyway, we had to rescue the East India Company, which was like the Google, Facebook, or Meta, whatever it is now, all rolled into one. Much too big to fail, owned by lots of important people. We had this tax on, so the way to rescue the country was clearly to sell more tea in the colonies. How the hell were we going to do that? We had a tax on tea when it arrived in the colonies of 3 pence a pound. Didn't raise much revenue, but we sure as hell weren't going to cut that because that was there to establish a principle that we could tax the colonies. Well, as a former bureaucrat, I particularly appreciate some bureaucrat in London figured out that, well, hang on, before the tea goes to the colonies, it comes through London, and we impose a tax on it in London. So let's take off the tax in London, and we'll make the tea wonderfully cheap in America, and everything is going to be fine. So it's a wonderful bureaucratic idea. It's more complicated than this, but that's the essence of the thing. So what could possibly go wrong for this bureaucrat with this brilliant idea? Well, what went wrong was that now the price of tea, legal tea, was going to be cut in the colonies, which wasn't good news for the smugglers, wasn't good news for the John Hancocks of the world up in Boston. So they will react to the cut in the tax on tea by the Boston Tea Party. So the irony, of course, of the Tea Party and so on is that the Boston Tea Party was actually an objection to a tax cut. What's the third story? The third story, well, imagine you're in Paris, July 1914. You're sitting in a cafe and you're reading the newspaper. What are you reading about in July 1914 in France? Surely you're reading about the looming catastrophe that is the Great War. Well, you might get to that, but your headline story is about this picture on the right. What's going on here? The lady in this picture is Madame Caillaux. She was married to the finance minister, Joseph Caillaux. And Joseph Caillaux was unpopular with the right wing for two reasons. One is he was in favor of good relations with Germany. And the other is that he was in favor of introducing an income tax. So the right-wing press were having a pretty vitriolic campaign against poor old Joseph Caio. And what they were planning to do was to publish some rather amorous and intimate letters that he had written to his wife, Madame Caio. What's the problem there? The problem was that when he wrote those letters, he was married to somebody else. So the current Madame Caio did not take very kindly to the prospect of these letters being published. So she goes over to the offices of Le Figaro, asks to see the editor. The editor comes back, politely invites her into his office, and she then shoots him dead. So if you look at the French newspapers of July 1914, top story is the trial of Madame Caio. Rising slowly from the kind of page 4 up to the top is the outbreak of the First World War. So what is the tax lesson in this, you might ask? Well, this one has absolutely no tax lesson at all, as far as we can figure out. We think it's just a good story that we had an excuse for telling in the tax context. With which, I think, I hand over to my wonderful co-author, Professor Slemrod, to tell us more.
Thanks, Mick, and thanks all of you for coming to hear about our book. Mick and I, this is our first in-person discussion of the book, but we've done 15 or 20 on Zoom. And I have to say the handoff is a little less awkward on Zoom. Standing up and sitting down. So in the first section of the book, we talk about the names that people give to tax to either make them seem less onerous than they are, or if you're supporting it, to make them seem more attractive than they might otherwise be. Sometimes the names are to repel people from the tax. So there was a tax in the UK that opponents labeled the dementia tax because it affected elderly people more than others. There was the Bridget Jones tax that affected single women more. And those familiar with recent American fiscal history will know that in the 80s, Republicans sort of agreed to not call the estate and gift tax, which they opposed, the estate and gift tax, but to call it the death tax, which links two of the most unpleasant things about living. It was soon after that the estate tax was not abolished but reduced. I don't know for sure whether the renaming was consequential. The lesson of the stories we tell is that the impact of a tax, consequences, and whether it's a good idea or not, are in no way related to the name of the tax, and we shouldn't be misled. In fact, sometimes taxes are named not for anything having to do with the tax, but for what the tax revenue funds. So that sort of changes the spin on the tax. In the first section, we also talk about what is a tax and what other ways government can raise revenues that aren't taxes. And there are very many important examples. The draft is a way for a country to raise resources. It's not called a tax, but if you force people to come to the armed forces, pay them less than what their market wage is, that's a way to get resources at a lower cost to the government than raising taxes to pay people their market wage. Printing money, of course, is another way to do that. It's not directly a tax. Who bears the burden? In the draft case, that's sort of clear. In the printing money case, it's the people who hold assets denominated in, say, dollars. As printing more money raises the price level, the value of those assets falls. And we talk about historically other examples of this. State monopolies, profitable state monopolies, are a way for the government to raise revenue in a way that's not called a tax. Think about U.S. state alcohol. In some states, to buy alcohol, you have to buy it from a state store. The price that's put on the alcohol is essentially a tax. The higher that price, the more the tax. Forced labor. We have some great stories about countries in dire fiscal need that made it pretty clear to especially the rich folks that it was time to give gifts to the regent. Some have even had taxes payable in lice. Actually, we have one example. This was in the Incan Empire. Some of the regions had no substantial tax liability, but the central government wanted these regions to get in the habit of remitting something, and so in one case, that's what they had to remit, lice.
Joel, besides the draft, can you talk about other examples of forced labor? Is it like prison labor or?
No, in some cases, historically, the rule was if you were a peasant, you had to work for 1 day a month building a road, putting in an irrigation system.
In the US, have there been examples?
I don't have, off the top of my head, examples from the US of forced labor. Okay, well, that's Elvis. The picture of Elvis in the book. What does that have to do with the topic of the day? Not only is it a picture of Elvis, it's a picture of Elvis on a postage stamp from the African country of Burkina Faso. And the reason that picture is here now on our slides is that this is the way that some countries raise revenue. They have, it's a hypothetical example. Burkina Faso will contract with a company in London to design stamps, to print the stamps, and to sell the stamps to stamp dealers, who then sell the stamps to collectors. As a stamp collector, not of this kind of stamp, but there are people who want the new issues of all countries. And so what do you put on the stamps to get people to buy them? Things that are going to attract people. Lady Di was very popular on stamps of countries that have nothing to do with the British royalty. Disney characters, very big. And Elvis. Who can make money from printing stamps like this? Mick and I cannot, because the collectors want to purchase stamps from countries. And so this is the way that a country like Burkina Faso can make some money. It's been dubbed by a political science the commercialization of state sovereignty. What does it have to do with taxes? Well, it's a way to raise revenue. But another commercialization of state sovereignty is to be a tax haven. Mick and I would like to make some money by being a tax haven, but it won't work. You have to be a country. And it turns out that there is a pretty strong correlation between the kinds of countries that issue stamps like this, which I call pandering stamps, nothing to do with Burkina Faso, and the kinds of countries that are tax havens. Okay, I told you this already, so you don't have to read this. Okay, I think you're back.
I'm going to, yeah, another smooth handover. We'll probably get better at it. So we come on to the second part of the book where we think about ideas of fairness and justice and so on and so forth in taxation. So we talk about these ideas of, whether tax should pay depend on your ability or the benefits you get from the tax system and some of the kind of historical examples of that. But maybe to focus on a couple of the things that I at least learned. Because of course, every government really has to worry about the perceived fairness of the tax system, even if they intrinsically don't give a damn about fairness. They have to worry about it because we know that perceived unfairness can jeopardize their rule. One of the things I learned was just the wide range of ways in which governments have tried over the years to tailor liability to some kind of verifiable notion of well-being in some sense. And they've tried all kinds of ways. This is just a subset. A couple of the more interesting ones was certainly in England and France were taxes that were directly based on your social class. So if you were a duke, you paid whatever it is. If you were an earl, I think an earl is below a duke, right? An earl is so you pay a bit less, and so on all the way down the social class. And this has some quite attractive properties in a way, because you probably, if you're a duke, you probably don't want to pretend that you're a mere earl in order to reduce your tax liability. It's kind of observable. You have some kind of incentive to be truthful. Taxation by regional quota has been quite common. It still is in some part of the world. So this is where you say, okay, we don't care how you pay this amount of tax. This is the amount of tax we want from Lancashire or some place in Vietnam. We leave it to the local elites to figure out how to share it in a reasonably acceptable way in terms of local politics. Other ways we'll talk about. There's taxing luxuries, windows, we'll come on to that. And I think one thing that when you see things in this long historical perspective, you realize, for example, that the income tax, we kind of think of this as a kind of the high point of fairness, or wealth tax, or whatever it is. But there's been this kind of continuous historical evolution in how we try to proxy well-being for tax purposes. And so I think, we think it's not the end. The income tax is not necessarily the end of history. Of course, we've already seen some examples of many tax rebellions we all know of around the world that, up to the present, had tax as a central element. What usually happens, though, is that taxation is somehow the thing that breaks the straw that breaks the camel's back. There's almost always something else going on, and tax somehow crystallizes all kinds of wider issues. So, for example, the gentleman on the left is Baibura. He led a colonial revolt against the British in Sierra Leone in 1898, which was when the British imposed a hut tax, a tax on huts. And it was a heavy tax. People didn't like it because it was quite burdensome. But it also kind of interfered with all kinds of power and familial relations in terms of the role of tribal chiefs and these kind of things. And it was as much the kind of disruption, seems to have been, as much the disruption to kind of local social standards that caused what was, again, this was not a kind of a minor thing. This was slaughtering people. And these are not the worst tax rebellion. I think the worst tax rebellions, or the worst tax incidents, we don't put in the book because they're so horrible. But this is kind of up there with some of the worst. But as we say, there are sometimes some spectacular effect. And so here is one story. Many of you will know one or both of the sides of this. So this is, so Marx says, Hegel remarks somewhere that, anyway, Marx says history repeats itself, first tragedy, second farce. So kind of as almost in order to prove the accuracy of this, the British experimented with the poll tax, 600 years apart. So the poll tax, in the simplest case, simple idea, poll tax is the same amount for everybody. Everybody pays the same amount, whatever their circumstances. So this was not first tried, but second tried. First time seemed to go well, so they thought, well, let's do it again at a higher rate. Didn't work out quite so well. So 1380 is what's called the Peasants' Revolt in England, which is probably the closest England ever came to a really bloody, completely bloody social order-changing revolution. It ended, you can see here, the gentleman about to have his head cut off is Wat Tyler, one of the leaders of the rebellion. Somewhere in there is the boy king, Richard II, who bravely stood down the revolters, promised to give in to all their demands. They all went away, and so he reneged the next day and slaughtered them all. I exaggerate, but this is the basic idea. So this didn't go very well. So for 600 years, no British government would really touch the idea of a poll tax. Until what happens? Along comes Mrs. Thatcher, and she says what we need is a poll tax, but we're going to call it a community charge. And this didn't go terribly well for her either. The British are pretty good on paying taxes, but this was kind of extraordinary non-compliance, and it was one of the contributing factors to Mrs. Thatcher's demise. You can see the tears in her eyes as she leaves 10 Downing Street. But one of the ironies, which I quite like, is that Mrs. Thatcher didn't call her thing a poll tax, she called it a community charge. But it really was a poll tax. What about 1380? 1380 actually was a community charge, in the sense that we call it a poll tax, but what the law didn't say that everybody pays the same amount. It explicitly required or encouraged the well-off to help the poor pay the burden. It was supposed to be whatever the groats or 3 groats, anyways, n groats per person in a region, and the rich were explicitly told to help out the poor, which in some cases they did. So there are some villages where the lord of the managers paid the whole tax. So the irony, Mrs. Thatcher's community charge was a poll tax, the poll tax was a community charge. And, I can't, Joel springs to action always on this slide.
Thank you. So Mick and I learned of our anecdotes in many different ways. This is one of my favorite ones, and I learned it on a cruise in the Caribbean in honor of my mother's 80th birthday. My brother and I and our families were all together. And if you've been on a cruise, in your berth, they put little brochures explaining telling you some stories about the places you're about to visit. We were about to visit Curacao, and this is, in that booklet I learned of this story. So this is a painting of the Queen Emma Bridge in Curacao. It's a footbridge connecting two parts of Curacao. It was erected in 1888. The American ambassador was behind it. And to finance the Queen Emma Bridge, there was a toll. But the idea was that the toll charge was to be progressive, meaning the burden was to be higher on rich people than on poor people. Well, how do you implement that in 1888? You can't really ask people to bring their income tax return when they cross the bridge. That wouldn't be right. So here's what they tried. If you were wearing shoes or boots, you had to pay the toll. If, on the other hand, you crossed barefoot, you could cross for free. The idea being, rich people wore shoes and poor people went barefoot, except for the progressivity was thwarted by aspects of human nature that you may relate to. That is, many poor people had too much pride to admit they were poor, so they would borrow shoes and cross, not admitting they're poor, but they had to pay the toll. And many rich people were not so prideful, and they would hide their shoes or boots before they crossed, and could cross without paying the toll. So an intent to implement the toll in a progressive way, in part thwarted by what we now call the behavioral response of the poor and the rich in Curacao. So the next section of the book is just about how taxes change behavior, and what in the economics of taxation we call the excess burden of taxation, meaning the burden to the private citizens of a tax is not measured only by the amount of tax remitted, but also an additional burden if the tax causes people and businesses to change their behavior and do things they otherwise wouldn't have done. So sometimes taxes change behavior purposely. That's the idea of the tax. It's not so much to raise revenue, but to change behavior. And our favorite, or I'll say my favorite example of this, is the tax on beards introduced by the Russian Emperor Peter the Great in 1698. Peter the Great was on a modernization kick in Russia. He wanted Russia to be more like England and France. And one thing he noticed was different between Russia of the time and England and France at the time is that the nobility in Russia had these big bushy beards. And he didn't want the nobility to look like that. He wanted them to look like the relatively clean-shaven nobility in England and France. He could have done that in a number of different ways, but the way he tried to do that is he imposed a tax on beards, meaning that if you were in public with a beard, you were subject to a heavy penalty unless you had paid your beard tax. And when you paid your beard tax, you got a token which you had to have on your body when you were in public, which indicated you paid your beard tax. And on one side of the token, it said, in Russian, of course, the beard is a superfluous burden, which is great given that in modern taxation we use the term burden to denote the extra cost to people of tax. And here's what the other side looked like. I've paid my beard tax. There's a very modern-looking beard. And when we were writing the book, Mick had a beard and I didn't. I found on the internet, on eBay, you could buy a replica of this beard tax token. And for Christmas one year, I sent him one of these tokens. Now, of course, you have to give it back. Okay, so the lesson of this story is that in some cases, the objective of the tax is to change behavior. It's not an unintended side effect. It is what the tax is aimed to do. Beard tax is one example. There have been taxes on believers in disfavored religions. The objective is to get people to change their beliefs. It's hard to verify what you really believe, but there was a tax in England on newsprint and newspapers with the idea of having less dissent through newspapers. Taxing smoking is a modern example. although in some countries the revenue raised from taxing smoking has gotten so substantial that governments in these countries are less eager to have anti-smoking campaigns because they don't want to lose revenue. And in Mexico, a very important example is taxing sugary drinks. The point is to get people to change their behavior. Another example we like is the tax on bachelors, which goes as far back as ancient Greece and Rome. In some U.S. states, it lasted to the 20th century. Tax on bachelors is a tax on unmarried men over a certain age. And you can think of justifications of why the government might want to do that. They might want to encourage marriage. They might think on fairness grounds, well, a bachelor doesn't have as many spending responsibilities, so they can afford, quote unquote, more tax. But we talk about the tax on bachelors in part to give a great example of the behavioral response. So in some countries that had bachelor taxes, they gave an exemption to men who tried to get married but couldn't find somebody to marry them. So it seems unfair to have the bachelor tax apply to them. So in these countries, if a woman would attest to the fact that this person had asked for their hand in marriage, and they'd said no, there would be a tax exemption. Well, what happened? In Argentina, we know, there came into being a profession known as professional lady rejectors. So these people advertised that they, for a fee, would sign a form saying you had asked them to marry them and they had said no. So these kind of taxes designed to change behavior are very important now. And the behavior that taxes are designed to change is often pollution or other activities related to climate change. Taxes on carbon fuels, taxes on driving on congested roads. These are behaviors which have what economists call externalities, impacts on other people that aren't captured by the tax system. So there's a strong argument for a tax on activities which have negative externalities, like polluting activities, and a strong argument for subsidizing activities like basic research and development, which have positive externalities. And this is in the same vein as the tax on beards. And there's a lively and important debate on whether taxes are a better way to handle these issues than regulation. After all, Peter the Great could have said, you can't have a beard, period. What's the advantage of a tax on beards over just saying, sorry, you can't have a beard? One advantage is with a tax, it actually differentiates between the people who really, really want to have a beard and the people who sort of want to have a beard, right? Because the people who sort of want to have a beard will shave rather than be subject to the tax. The people who really, really want to have a beard will keep it and pay the tax. And that is, from an economic efficiency point of view, a good thing because it distinguishes among people and businesses for whom the cost of changing behavior is high or not. So I've been talking about taxes designed to change behavior. Most taxes are designed to raise revenue, and the change in behavior that they cause is inadvertent and unwanted. And a great example is the tax on windows in England that lasted a century and a half. Why was there a tax on windows? It sounds to a modern ear as quaint or maybe crazy, but it was certainly not crazy. Here was the idea. They were looking for ways in 1696, before they had an income tax, to have a tax where the tax liability was higher for the richer folks. Back in the day, in 1696, most wealth was in personal residences. So how do we do that? How do we tax on the basis of the value of your personal residence? Now we have Zillow, but in 1696 we didn't. So what's correlated with value of a house? Well, that's pretty easy to measure. First they tried fireplaces or hearths. The grander the house, the more fireplaces. Let's have a tax on fireplaces. Problem. To verify the number of fireplaces in a house, the tax inspector had to go inside. And that was viewed as an intrusion on their privacy. All right, so what's correlated with the value of a house where the tax inspector doesn't have to go inside? The number of windows. Not a crazy idea, right? A house with 2 windows is almost certainly worth a lot less than a house with 20 windows. What happened? So we're talking about behavioral response to taxes, and this is what happened. So this is a picture of a current day building with clearly built with windows, some of which were bricked up, and they were bricked up in this century and a half. There were also, can read stories about buildings built in this era where the windows opened up 2 rooms to light. So the windows were, on 2 rooms until they changed the laws about this. So this is a visual example of the behavioral response to taxation to reduce tax liability. In modern economics, we look for evidence of behavioral response by looking at market behavior of people when the tax liability changes a lot if you make a small change in your behavior. This window tax from 420 years ago is a great example because the tax on windows had the following structure. There was no tax if you had up to 9 windows. 10 and more, there was a substantial tax. Then like 20 and more was the next level. You can go back into the records of the window tax in England and see there's a heck of a lot more buildings with 9 windows than you would have thought. What's the magic number about 9? And a lot less with 10. Why? Because 9 was no tax, and 10 there was a substantial tax.
Did windows get bigger?
They should have.
Yeah.
We talk in the book about the tax on bricks per brick, and there is evidence that bricks got bigger. So I don't know of evidence about windows, but bricks, yes. So so we're looking for visible examples of behavioral response. The window being bricked up is one example. Another is in places where the property tax, based on a relatively easily measurable quantity, the frontage on the sidewalk. Poland and Holland did this as much as 4 years ago. Vietnam still does. What happens if the tax depends on how many feet face the sidewalk or the road? Skinny, tall houses that go back a long way. These are called rocket houses in Vietnam. This is a picture of rocket houses. So these are visible. The boarded up windows and the rocket houses are striking examples, visually striking examples of what in our courses about the economics of taxation we call excess burden. So the cost to society of these taxes was to the private sector was the taxes remitted, but also the fact they had these crazy houses with bricked up windows, houses weirdly constructed because of that. And it's a difficult concept to convey. Many of you in this room have, I'm sure, tried to teach excess burden, and it is not easy to get across because to know how much behavior changed because of tax, you need to know what behavior would have been if it weren't for the taxes. Well, we don't really know that. And we have fancy statistical techniques to try to estimate that, but we don't know for sure. But we have a good idea of what a house should look like, not with those kind of windows, and and skinny and tall and going that far back. So this is our comparison of how to teach excess burden. Those of you who do teach it or have taken it know that when we teach this, it's the triangle that's depicted by D plus E on a supply and demand diagram. I won't say anything more about that. You either know, have seen it before, or it's not going to help for me to talk more. But that's on the left of these screens, that's how we teach it. We suggest with this book that a better way to teach it is to show this picture. A picture of a dog without a tail. What does that have to do with taxation and excess burden? Well, the story is there was a tax on dogs in England because the royalty didn't want the peasants' dogs to interfere with their hunting rights. So they put a tax on dogs. But they only really wanted to discourage dogs that were hunting dogs. And there was a belief that dogs without tails wouldn't be useful for hunting. So dogs without tails were exempt from the tax. What happened is that the story goes that you can read on the internet in a second that people started curtailing their dogs. They looked like this. And to this day, certain dogs, those of you who are dog lovers know that certain breeds of dog are well known and valued for being tailless. The problem is that it turns out this story is probably not true. And the story of how we learned it's probably not true is interesting in itself. There are two experts in the world on dog taxes who have published in all the history journals, and I read their articles, and they never mentioned this aspect of dog taxes, this behavior response. So I contacted both of them, and they said, yeah, we don't think this is right. So it's such a good story. It's still in the book. And we also say we now think it's not true. But we kept it in the book. Mick, stand up when it's your turn. Okay, so fourth section of 5 is about tax evasion and enforcement. So it's clear that tax evasion has been around as long as taxes have been around. We know this because of a tablet from 4,000 years ago in Sumer about a man who was imprisoned for receiving smuggled goods. We know this because almost 3,000 years ago, there's a papyrus deed that records that an old man transferred his property to his sons at a nominal price to lower inheritance tax. That is a very modern avoidance/evasion technique that was around almost 3,000 years ago. We also have visual evidence of tax evasion, and this is a frieze from ancient Egypt. I know it's a little hard to make out what's going on, but what is going on here is that the gentleman in the middle there is tied to a post, and the gentlemen on either end are whipping him as punishment for tax evasion. The arrows are not part of the frieze, in case you didn't guess that. They are to draw your attention to the whips. It looks a little bit like they're playing the flute, but they are, we know from the inscription, they are whipping the convicted tax evader. But in general, with this last exception, evasion is not particularly photogenic. We really make an effort in the book to illustrate with pictures, images, the points we're trying to make. But evasion is hard to do because the whole point of evasion is you're trying to hide it. So you're not going to, put in a magazine, oh, here's what I'm doing for tax evasion. So it's generally not visible. More amenable to being visibly arresting are tax enforcement episodes, such as the Egyptian tax evader being whipped. So we tell some stories about notable tax enforcement episodes. One is, and how do you try to reduce tax evasion if you're a government? Sticks, punishments for detected evasion, and carrots for good behavior. Sometimes the stick part is taken too far, maybe too literally. In the 15th century, Vlad the Impaler, who ruled in an area which is now Romania, assaulted a town that had resisted his taxes, set it on fire, and, true to form for the sticks analogy, impaled many of its inhabitants, hence his moniker these days. For carrots, there is a city in Argentina that said, for those people who are compliant with their property taxes, we will randomly draw some of their names and we will pave the sidewalks in front of their homes. So that is a carrot. For the last approximately 10 years in Pakistan, the top 100 taxpayers in 4 different categories of taxpayer were given a taxpayer's privileges and honors card, which included an invitation to a state dinner and various other privileges, including this. So I had a PhD student who was Pakistani who was working with me on a study of some aspect of Pakistani taxation, and he knew about this taxpayer's privilege and honors card. So one of the things having this card gave you was a special line in immigration. Line 10 it says, it might be hard for you to read, taxpayers' privilege and honor card holders. My co-author didn't have one of these cards, so he wasn't on line 10, but he got close enough to take this picture, which showed there wasn't anybody on the line, and there were people it looks like on line 9. I don't know how far back it went, but it's an example of a carrot. You're on now, right? Avoidance?
Oh, whatever, yeah, I can do.
Hey, go.
Yeah, okay, so, so continuing the theme of of avoidance being rather more photogenic, we've seen bricked up windows, skinny houses, all kinds of other examples. Let me skip to one. We have many in the book. Ships. So ships actually have ships and dogs and things to do with heads like hats and stuff actually feature largely in the history of taxation. So here is a ship example on the left. So the ship example on the left is what's called a float, which was a Dutch ship and slightly distorted. But if you imagine looking at it head on, it has quite a narrow deck and it gets quite broad, kind of at the waterline, and then kind of curls up underneath. Now, it turns out that that's actually quite a good way to build ships, it seems. Joel and I don't know, we don't know anything about this, but we're told this is quite a good way, a safe way to build ships. And what was going on? Well, basically what was going on was the Dutch had a tax that was related to the area of the deck. So what you want to do to have a good cargo size is have a pretty small deck, but then a lot of cargo space underneath. So this is actually an example of a tax-efficient ship that it's kind of argued a little bit in the shipping tax literature, but that may have actually been an example of a tax that gave rise to a kind of desirable or an efficiency-improving innovation. In contrast to what we read about the British shipping in the 19th century. So British shipping had a different tax structure, which led to ships being actually very thin and very deep. And that's apparently a very bad way to build a ship. So apparently, the British merchant fleet was sort of the laughing stock of sailors around the world who knew about these things. So the irony being, of course, that while the Navy was ruling the waves, a lot of the merchant Navy was kind of underneath the waves. So we have other examples of these nice pictures of tax innovation. On the right are some tax-efficient brothers. So what's this about? Well, we have to talk in the book about international taxation. That's kind of incredibly complicated with transfer pricing and inversions and all these complicated things. So how do we tell that story? Well, we tell that story by going back to these gentlemen here who are the Vesti brothers. And they, in the kind of early 1900s, built one of that era's sort of first large multinationals. They were selling meat, basically, and they were feeding the armies of Europe and so on. So it's a very kind of global enterprise. They had cattle in Argentina, eventually also in Australia. They owned the kind of the ships, refrigerated ships. So it was kind of quite a complicated business. And they were doing all the things, they were pretty much doing everything that Google and Facebook and everybody else has been doing since. So it's quite a nice way, I think, to, and they were very controversial figures. They did things like they left the UK during the First World War, around the time that an excess profit tax was introduced. One of the brothers moved to Argentina. Various colourful stories about the Vestis. And the Vestis kind of became quite notorious, the family, as tax avoiders and allegedly evaders at some points in their careers, right through to pretty much our own day. So the story goes that when, in I think the 1970s or early 1980s, the Queen herself, bless her, voluntarily decided to pay income tax. So now everybody was paying income tax, except the then Lord Vesti remarked, well, that makes me the only one who's now not paying any tax at all. So there are the Vesti brothers who are kind of slightly colourful characters. We talk in the book, so I'll just keep going until Joel tells me to stop. We talk in the book, as you know, when you think about a tax that's differentiated in some way across commodities or activities, you have to draw some line to say what is taxable and what's not. All kinds of nice, weird stories about the anomalies that gives rise to. Here is one. So, if you're taxing cigarettes, you have to define what a cigarette is. If you have tax per cigarette. So if you say, well, this is the tax per cigarette, you're going to have an incentive, for example, for people to produce very long cigarettes that you then cut up into pieces. This is actually a fictitious example, but Joel has since discovered in the 1930s, this did actually happen. There was a US company that produced, I think it was 4 times the length of a normal cigarette, and you just cut it up into pieces. And then, we have silly examples, but then this gets quite serious when you think about, for example, how do you distinguish between debt and equity, which gives rise to, really, I would say, quite severe sort of macro relevant consequences. We talk a lot in the book about elements of tax administration. Let me just go through kind of 3 stories that illustrate some of the things we talk about. So I mentioned that one of the things that has changed quite a lot over time, over kind of at different speeds, has been the technology. So now everybody in tax world is kind of excited about blockchain and all these kind of things. What do we have on the left? On the left is something called a G, which was used in China, I think again about 300 BCE. You can see it's kind of in 2 parts. And this was used to enforce a tax exemption on certain people transporting goods down a river. And how it worked, well, you can see it's a very beautiful object, sort of bronze and very heavily, beautifully decorated. And you can see it, or a replica, in the Beijing Tax Museum, because there are surprisingly tax museums around the world. One in Beijing, one in Jerusalem. That's it, I think.
Oh, there are more.
There's more? Okay,
I'll
there's
tell you
more.
about them later.
Okay. So how did it work? Well, basically, one part was carried on the ship, the other part was held by the customs people, and it was only if these 2 bits fitted together in an appropriate way that the goods could travel tax-free. So it's kind of not dissimilar to me at least, has these elements of trying to be non-manipulable, non-ex-post changeable, and that we talk about with blockchain. And what I think is quite interesting is it clearly looks like a bamboo, right? At least to me it looks like a bamboo. So it seems to be clearly what they did before was just take 2 bits of bamboo, split it, give one to one party, another, which is kind of pretty clever, really, I think. So that was 300 years ago, 300 years BCE, and we talk about other kind of developments in technology since. We also talk about the kind of internal organizations of tax administrations, because now we think tax administration is just a part of the bureaucracy. Of course, it wasn't always like that in history, and at least as prominent in history has been what's called tax farming, which is essentially where the government sells the right to collect taxes to some private enterprise. They then collect the tax, they keep whatever's left over. And the kind of most prominent example of this was, of course, in Ancien Regime France, where the tax farmers became amongst the most unpopular representatives of symbols, in a way, of the Ancien Regime. And you can see that tax farming didn't end very well. 1794, all the tax farmers who hadn't had the luck or good fortune to end up, to leave France, ended up having their heads cut off. But I think we talk in the book about the general issues this raises about actually incentivizing tax officials, which there's been some recent work on this as well, which I think is kind of enlightening. So I think this whole issue of the role of the private sector incentives in tax administration has not gone away, even if the tax farmers have. Although it has to be said that the tax farmers were unpopular partly because they were thought to have profited more or less illegally at the expense of the government. In fact, when the accounts were settled in the early 1800s, it turned out that the tax farmers were actually owed money by the government. What's the third one? And then I'm going to hand back to Joel to wind up. We talk in the book, there are many people who are famous who were tax administrators at some point. So Geoffrey Chaucer, Cervantes, Sam Adams, Tom Paine, a whole load of people who were famous were tax administrators. But they're not famous because they're tax administrators. This is a guy who became famous, had his own statue, because he was a good tax administrator, basically. Who is this? This is a gentleman called Robert Hart. So Robert Hart was a young kind of lad from Northern Ireland who, for somewhat unclear reasons, decided to move to China in the 1850s. And he, very turbulent times, he was there from the Taiping Rebellion all the way through to the Boxer Rebellion, lived through all this very difficult period, and rose to become head of the Chinese Imperial Customs Service, made the Customs Service kind of almost a global standard for a clean, non-corrupt organization, was very heavily involved in the wider modernization efforts of China, helped to build lighthouses around the coast, all kinds of things, and his reward was to have a statue erected to him. So this statue stood in Shanghai until the Second World War. So those of us who work on taxation, we may think we're pretty good and important, but wait till we have our own statues built. The other interesting thing about Robert Hart is he's the only tax person we know who has a novel written about him. So he has a 3-part novel written about him, because not really about his tax administration, but he had a very guilt-ridden but nonetheless very active love life when he was in China, and he kept diaries that were recently discovered. And so there is now this. Actually, I can't say it's a wonderful. It's remarkable for being a novel about a tax administrator. But with that, I think I'm going to hand back to Joel to wind up.
All right, take us to the finish line here. Last part of the book is about politics and taxation. Of course, economists don't make tax policy. Tax policy has to get through the political process of each country. We talk about what we view to be successes of tax policy. In the last half century, the rapid spread of the value-added tax is the tax success story. In the late 50s, it was just an idea that some people had, and now there is a value-added tax in over 160 countries, raising about 1/3 of revenue worldwide. One notable country does not have a value-added tax, which is our country. We also think the Tax Reform Act of 1986 in the U.S. is an example of a success story. But there probably more fun are to read about the failures, and there are many failures of tax policy, sometimes because the policymakers ignored fairness considerations, sometimes because they ignored whether the tax was administrable, and sometimes because the political process did not restrain the power of special interests. I'm going to tell these next couple stories without making allusions to what's going on in Washington right now. I'll let you do that yourself. So the first story is about margarine, which was invented in the mid-19th century in France. It got exported to the U.S., and you can guess which special interests weren't excited. This is the dairy interest, very powerful in the middle of this country. And the dairy interests were politically powerful enough to first try regulations to reduce the effect of competition. They, in many states, made it a law that margarine wrappers had to have health warnings. In at least a couple states, the regulation was that margarine had to be dyed pink, ostensibly to distinguish it from butter, but I think really to make it look less palatable. Chain stores is another example. The mom and pop businesses of the U.S. weren't excited, and there were taxes in many states on chain stores. The modern example you might think of is taxation of remote sales. And the lesson is sometimes special interest lobbying succeeds, and the tax system doesn't represent the interest of the general public. So in case you were looking for stories to tell at the next cocktail party you go to, you all know the story of Lady Godiva, but what you might not know is why Lady Godiva did her naked ride through Coventry. Her husband was the Lord of Coventry, and Lady Godiva heard from the citizens that there were certain taxes that were oppressive. And she kept lobbying, I guess you should say, her husband to reduce these taxes. And, again, here the story goes that her husband, Leo Frick, said, listen, if you care so much about this, ride naked through town. If you do that, I'll reduce the taxes. And that's what the story says. She did it, with her long hair covering parts of her body. And he fulfilled the promise to reduce the taxes, to abolish some of the taxes, except he did not abolish the taxes on horses. Okay, so the last story before we stop and see if there are any questions or comments is about suffragette heroines. And this, it's an interesting episode, the connection between the movement to give women the vote and taxes. In 1852, the noted American suffragette Susan B. Anthony asserted the right of property-holding women to refuse to pay taxes as long as they were not represented in legislatures. In the British suffragette movement, the same thing happened. This, Clemence Houseman was a notable British suffragette, and she went to inordinate lengths to give the authorities no choice but to imprison her for tax non-payment. She spent a week in prison and brought much publicity to her cause. There is a picture of Clemence Houseman. You can tell it's London because it's raining. And next to her on your left is a poster which says "No vote, no tax." And in the upper right is the logo of the British suffragette movement and the Women's Tax Resistance League. No vote, no tax. Well, that's the end of our stories. Thank you for your attention. We very much appreciate it. I don't know what the story is on questions. Mick and I maybe could both stand up here if that's not too oppressive, but take it away.
Thank you very much, Joel and Michael. That was fantastic. Any comments and questions? I've definitely got one question just to start with. So many of the examples in the book, you focused on national taxation, which has sort of historically been the focus of tax authorities. But many of the challenges we now face are increasingly international. And I guess one example of that is the recent attempts to agree a common corporate taxation rate because of the mobility of capital around the globe now. But sort of climate change is also another example potentially where it's a very hard externality to solve with national tax policies. So I wondered if you thought there were any insights from history as to how we might be able to kind of overcome these international challenges, or examples from history where regions perhaps have got together and tried to overcome these externalities that span national borders.
We certainly have a chapter on international issues. There's not that many examples. To be honest, there aren't that many examples we can use. We talk a little bit about the emergence of double tax treaties. The story of why UK and Switzerland, well, one of the cantons in Switzerland signed a double tax treaty because the Brits used to go there and die, and then who gets to tax the money and stuff. But there aren't on the minimum tax. I mean, there's a little bit in Europe, which we don't talk about that very much. We talk about the minimum tax idea and tax competition, but I'm not sure we have great positive examples of how these things have been addressed, because in a sense they haven't, right? Same with the carbon.
I think it's fair to say the minimum tax agreement is a surprise to people who follow international tax. I think as of 5 years ago, most people would not have predicted what happened. What remains to be seen is how effective it will be. But the fact that countries can agree to something like a global minimum tax, I think doesn't have any clear historical precedent. Yeah.
What was the story about tax-free zones? What's the incentive behind that?
And by tax-free zones, you're talking about tax havens in
Yeah, tax havens in countries which, you have a whole part of the, a town that's free of taxes. And the incentives, I guess, are that the income that's generated by these industries will eventually, down the road, produce more taxes than otherwise. But was that the logic behind it?
I think that might have been what some people were thinking. Even if it doesn't generate revenue, if it generates business and prosperity for people, that could be a reason to do it. For tax havens, it's clear that certain people in tax havens, in particular the international lawyers, do very well from the tax havens. Even if the tax rates are close to zero, there are all sorts of fees that the the government collects, and maybe they think that people coming down to tend to their accounts will stay for a few weeks in hotels and on the beaches. The havens tend to be those kinds of countries.
I think to some extent that the rationale differs across countries as well. I think some countries, the tax-free zone is partly there because the domestic tax system is seen as so bad that it's a way of committing. So you're out of the tax system, so you don't have to worry about governance issues or whatever. There's just this thing that we aim largely for exporters and for foreigners. We're kind of just ring-fencing it from the economy because people aren't going to come and pay the VAT because they want some deal on the VAT because they're in the regular system. They're not sure they're going to get refunds. So it's it's also a commitment not to apply some of the bad features of the domestic tax system in some countries. But I think it varies because even the nature of the tax deal you get in tax-free zones varies quite a lot.
I might be confusing this with a different book, so I'm sorry if I'm misquoted, but I vaguely remember an example from Secretary Mellon about labor versus capital taxes in the book. Can you say a bit about the history of tax rates on labor versus capital and when they were higher? I think there was something about like following the British case and then they switched or something in the US.
Yeah,
memory's hazy.
I'll try that and please correct me. So the British had an income tax before the US did, and in the late 19th century, early 20th century, there was a distinction between earned income and unearned income. What the British meant by that was earned income was labor income, and capital income was unearned income. And you can tell by the name given that the differential in tax was that the unearned income was taxed at a higher rate. So capital income was taxed at a higher rate than labor income. So that's 125 years or so ago. What's happened in 125 years is it's switched. So now, on average, capital income is taxed at a lower rate than earned income. So that may be, I don't remember the role of Andrew Mellon, other than that it'll allow me to pass along the following fact. In 1913, the U.S. had no income tax. That's when the 16th Amendment was passed, which cleared a constitutional hurdle. 1913, no income tax. 4 years later, 1917, the top rate of the income tax was 77%. For those of you who think that taxes can't change in a fundamental way in a short period of time, that's a 77-point increase in 4 years. I don't remember the link between Mellon and the earned and unearned. You?
I was hoping you do, because I think we do have Mellon in the book, but I was hoping you'd remember that bit. The bit that sticks in my mind was the bit that you mentioned, which was this very long debate in England about this issue, which is quite hard to follow because they ended up talking about earned and unearned, but they had other terms before, like it was precarious versus permanent or something. So the language kind of kept changing, but it was, there's this book by Daunton, which has several chapters on the evolution of this debate. And now eventually it was the Liberal government, I think, of 1907 that finally brought the idea that we should tax what by then they were calling unearned income heavy. But it was always a big issue with the British income tax. I had a sense less contentious in the US.
I agree.
It was always a long-running kind of Gladstonian kind of debate in the UK how to do this. Yeah.
Have you thought, it's obviously a historical book, but have you thought about how, crypto and sort of, modern, modern changes might affect ability of the Rascals and to avoid giving up their revenue?
Yeah, we've thought some about it. In the last chapter, we try to look ahead about where taxation is likely to go in the future, and we relate it to challenges of growing inequality, technological change, need for revenue, things like that. I think the simple answer is that some technological developments facilitate avoidance and evasion. It's harder to track things down. Your financial affairs become more opaque, but some aspects of it make it easier for the government to keep track of you. And who's going to win that race? I don't know.
Some things where economists would kind of argue on efficiency grounds, there's a very clear prediction on what the optimal tax structure should be. So a classic example being congestion pricing, right? Congestion pricing is clearly the efficient way to deal with congestion, but it's extraordinarily difficult to implement in practice. There are a few cities like London that has a form of a congestion charge. Singapore has a more sophisticated system. And one story for that being difficult to achieve would just be pure vested interest. It's the vested interest of automobile drivers and so on. Another story would be related to your half tax, so people kind of feel it's a behavioural intrusion into some sort of right to free space. And so I wonder whether you had any thought on those kind of roles of vested interest versus these kind of sentiments and perceptions of fairness in influencing taxation.
You want to take
Well,
that?
I think just on the latter point, I think one of the things I learned writing the book was the importance over the ages of this privacy thing. That Joel mentioned the half tax as being very unpopular, but it was kind of one of the things in the Glorious Revolution was getting rid of the half tax, and it's in the Bill of Rights and everything. And so it's one of the things they were supposed to be shouting at William when he arrived and all this kind of stuff. Or the French income tax. A lot of the income tax resistance is at least couched in terms of privacy. It's kind of just, and even, for example, I guess the design of withholding in England, as you know, which was designed when the income tax succeeded, it was designed so that no official would know your total income. They might know your income from source A, source B, but they wouldn't be able to add it up. So I think the privacy thing has been more striking to me as we wrote the book. But then, to the other point, in a way, we come to an age where people are giving all this information to Google and Facebook every day, but they don't want to give it to the government. So what's going on there? I don't know the answer to that. But.
One second. So when, if you're interested in the politics of taxation in the U.S., the best book out there is a book called Showdown at Gulch, which is about what led up to the Tax Reform Act of 1986. Somebody's going to write a book like that about what's going on now in Washington. And because both privacy and special interests are playing a role. The proposal to allow the IRS access to your bank account, which is now, I guess the threshold is going up and up, maybe will be out completely, is an example of that. And I don't have to tell you about the role of special interests in the debate. That's an example of the kind of issue that's in the history of taxes and is very alive today. Another would be the constitutionality of various taxes. The income tax was first ruled unconstitutional by the Supreme Court. We needed an amendment to the Constitution. And many lawyers think that a wealth tax, which has been proposed, and even a tax on capital gains at death would be unconstitutional. We may or may not see if that's true. Yeah, I had hands both. Yeah, go ahead.
I wanted to do a quick follow-up on that privacy issue, because it does seem to me that that's very distinct from one country to another. So France, in particular, had a tradition of publishing taxes that were paid. And it obviously then is a good enforcement mechanism, because the neighbors know if the rate is too low, if the taxes paid are too low, and they will do denunciations. So I wondered whether you've done some kind of comparative assessment of different preferences on
I haven't done
privacy.
that. But you're right that I know of 4 countries now, France not one of them now, that has public disclosure of taxes. So in Australia for businesses, in Norway, Pakistan, and forgetting the fourth, have public disclosure of individual taxes. So you can just go on the web, look up somebody's name, see their declared taxable income, tax liability. And I've myself done work on the impact of that on tax compliance, which I'm happy to talk about at a later time. Yes?
But I had a kind of real question on the poll tax story from the UK. And I wondered whether you go a little bit into the history of it, because it was actually designed with a relatively plausible kind of motivation. That was that local taxes were decided.
The Thatcher poll tax.
The Thatcher poll tax, not the Tyler stuff. But the idea was really that because local taxes were set on property, fundamentally on business property, most of the voters didn't pay any local taxes. And so they had a really strong incentive to push up the rate of tax to such a level that the cities died out because the businesses fled.
Yeah.
And Liverpool was always held up as the striking example of that. And so the poll tax was calculated to be the exact antidote of that, and it was obviously absurd and went badly wrong. But there's a kind of political science motivation for doing it, and I found that very striking.
Yep, no, you're right. We talk about it in the
We'll
book.
talk about that, and I think we do say it wasn't the stupidest tax reform any British government's ever done. But I just wanted to mention too that the first US income tax you also published.
Yes.
Everybody's liability, right?
Oh, wow.
Didn't
For
last
the
too
top
long.
earners.
Yeah, the
But
top
only
ones.
the top people
And
were
like
paying.
yeah.
Was it only the top?
Yeah.
Well,
Oh,
only
you
the
got
top
the-
people paid, right? Because it wasn't almost
Right.
everybody exempt.
No, but there's data on, so we figured it'd be nice to get Abraham Lincoln's tax payment. We couldn't find his tax return.
Oh.
But,
I think it was later.
But it was
like
published,
We're talking about different income taxes.
Yeah.
So
Well,
the
the
first,
Civil War, the
Civil War one.
the temporary income tax.
the Civil War,
16,
Ah, I
whatever
don't
it
know,
was,
yeah.
and then in the 20s, there were 2 years when some set of income tax information was public. And the day after it was released, it'd be on the front page of every big newspaper, and inside they would reprint all the information. That lasted, I think, just 2 years. Yeah, sir.
I mean, one way to think about it is that the history of constitutional democracy in Britain and then all the countries that followed from that is a fiscal story. The story of taxation goes back to Magna Carta and all the things that happened, the Glorious Revolution. So in a sense, that's you could rewrite economic history, and taxes are a key part of that. How it evolved and why some countries did better because they were able to deal with that. Because it's tied in with property rights. Property rights are really important.
I think
That's certainly true. And there is a literature on development of fiscal capacities, and it goes back. I mean, I think the first thoughtful example of tax impacts we have probably is Herodotus. So Herodotus tells the story of King Lycurgus, I think, who
Go for it.
used to. The basic point is that he was a sophisticated villager. That he would destroy the village, but he would leave enough for them next year to kind of plant the seeds, and he'd come back and like what's it called? Seven samurai, Magnificent Seven, right? It's the same idea that goes on there. So, but you're right. I mean, and we wouldn't claim to be that level of depth, I think, but I think we're certainly saying that tax runs through a lot of this stuff. So.
What do you think the Tea Party, because this was long before the Tea Party of 2010, why do you think that story's gotten so historically mangled? That right, I mean, I only learned like 6 months ago that this anecdote that you just shared about the decline in taxes on the British East India Company tea. And
that is the British version of the story.
But it wasn't a tax on tea. I mean, do they have just American anti-tax ideology that story's gotten mangled? Because it was long before the Tea Party. I mean, I learned as a kid that we were angry at the tea tax, not the tea tax decrease.
I think, yes, that's the reason.
Yeah.
Henrik, you had your hand up. Yeah.
Yeah, I had wanted to sort of hear your thoughts, if you had any thoughts on. So we talked a little bit about trying to correct behavior due to externalities, whether it's the congestion charts or environmental externalities and so on. And then you had all the interesting stuff about what we call things. So one of the things that I feel, distinguishes the U.S. from most other countries is that whenever the U.S. wants to correct behavior through externalities, they love to do it through tax cuts as opposed to spending. tax credits are fine, but we don't want to, subsidize things. And then there's this term in the U.S. which has always struck me as really odd, and I think it's pretty unique to the U.S. This term, tax expenditures. And I just wanted to hear if that's a term you've thought about and how it came about and the reasons are for it. I don't know about the UK. We don't use the term tax expenditures. It's an inherently confusing term. It doesn't exist in continental Europe, I think.
Yeah, I think the term goes back to the early 60s in the US, I believe. So for those of you not familiar with this apparently self-contradictory term, tax expenditure is when a tax reduction is equivalent to a spending program. But of course, in the budget, it looks very different. So if you have a tax expenditure, you can claim that you have successfully implemented smaller government. You can't do that if there's an explicit expenditure, even though the real effects of the two are the same. Now, why that term isn't used elsewhere, I don't know, but I'm sure tax expenditures, the concept, applies in other countries too. Are you claiming that other countries use tax expenditures less? Aren't there mortgage interest deductions in a lot of countries? And
I think the U.S. has gone much further. So you think about, let's just think about the latest Biden plan, and when we think about incentives that change, environmental externalities. In the U.S., it's often going to be a discussion about tax credits, as opposed to imposing taxes on, say, polluting cars or whatever it is. So the U.S. seems like tax credits more than positive taxes, even though the relative price changes is trying to achieve the exact same thing.
Yep. Well, maybe we're back to the anti-tax mentality we were talking about a minute ago.
But it also just makes it makes for a very complicated way of providing, social insurance. I mean, and I think it just folds over into like people hating the tax code even more, because to get these things, you have to fill out 1 million pages, and but it is. So we don't know offhand. I totally agree with you. My instinct is that we do more tax expenditures in the U.S., but I guess I don't know of a careful comparative work on that.
Yeah, I think
Yeah, there's a lot of studies, but as you say, they're not very comparable. I mean, they are big numbers in other countries.
They are, okay.
But it depends what you call a tax expenditure also, right? So whether because that has to be defined relative to what is the normal tax system, right?
Right.
But I think some of it comes down to countries, I think, care quite a lot on what their tax GDP ratio looks like. I mean, they make a lot of fuss at the OECD. They don't want to be the top. You want to go down the tax table, the tax GDP table. I don't know, but I don't have a more sophisticated one, but it's true. I think it's true. But it is a terrible term, right? I think we have the example, Jon Stewart gave some rant, right, on one of his...
Right. On the Daily Show. Yeah.
On the Daily Show. So someone you would think of as normally quite sensible and informed was saying what a dumb concept it was, right? And clearly didn't get it.
He didn't get it.
Yeah.
Most tax expenditures go to the ultra wealthy, right? Like the 2017 tax cut. Why are the ultra wealthy getting tax reductions when they have the greatest ability to pay taxes? And paying taxes should be seen as patriotic.
Yeah, that's an important question that I'm not sure I can answer in the 2 minutes remaining to explain the...
Is it just lobbyist money going directly to Congress as a bribe, and that's the transaction?
Yeah, I can't honestly explain why the distribution of tax liability in the U.S. by income or wealth is what it is. I'm sure part of it is the political power of different groups. Why the effective tax rate is lower because of tax expenditures as opposed to just explicitly cutting the rates brings us back to what we were talking about a minute ago.
What are the...
Just add, come to tomorrow's talk,
Yeah.
and you'll get the answer to your question.
Thank you. I hope so. Well, I wish Congress would attend.
I was just going to say, one of the things I learned that kind of shocked me in the US were these rifle shot provisions you used to have, which even in the 86 Act, I think it says, here is a tax break for a motor car manufacturing company established in Detroit on the 15th of January, 1953.
Oh my.
That kind of thing, right?
Because they can't put in the code the name of the only company that gets this tax break. They have to describe it
It's a bribe.
as if any company that had these characteristics would get this. But of course, everyone knows it's just one
That was
company.
the Louis B. Mayer capital gains tax provision or something.
Yes.
They thought only this one person would qualify because it was so narrowly, but then somebody else did, you told me at some point, to their surprise. But that kind of shocked me, I must say, as a way of doing business.
Well, Joel and Michael, thank you very much for an absolutely fascinating presentation and discussion. Thank
Thank
you
you
very
all.
much again.